Hi guys, this is Pete here. So the video here you're about to watch is a session that I did with my close community in the Stock Market Genius investment community. If you want to find out more about that, you can go to the link below. But basically, what I talked to them about was my perspective on China investment and why do I think China might be right now at the starting of a potential bull run, and also a bit of mindset training on how do we be a better investor through one of our recent profitable trade, Palantir. All right. So if you want to understand how we invest in the Stock Market Genius community, this will be a sneak peek for you guys. All right. If not, enjoy the show. All right. Okay. So the next thing I want to share with you is, of course, the segment on China. Okay. So if you realize, if you have been following the market a lot, you realize that actually in the recent months, okay, especially in the late part of 2024, China and especially Hong Kong started to form a higher low situation. And by late 2024, they start to form a higher high. Okay. But however, this higher high, while it pierced through the 200 moving average at first, it was quite promising. It did not bounce off the 200 moving average and it crashed back down here below the 200 moving average, which is why I was very, very hesitant. Many of you has been, messaging me and asking me, "Hey, what's going on? Can you take a look at China? I think China is very good," but I'm very hesitant because this kind of hate fake, right, has happened to us multiple times. The last time Hang Seng did that, right? Okay, it did this and then it came down and then okay, so it is very scary. Right now, what I see is that a second head up. Okay. Potentially this could be a sustainable recovery, hopefully. Okay, but this is a bit more promising because right now we are riding on the back of a nice trend upwards. You can see, let me just delete this first. Okay, we are forming a higher low and a higher high. So hopefully we'll see this one a bit higher. And I think it's quite promising. One thing I really like is that I'm seeing quite a lot of institutional investors. For example, David Tepper. I don't know if you heard of him before. He runs the very interesting fund called Apple Palooza. Okay, right? And he has been a big proponent of China, right? He's been increasing his stake in China as well, right? So today I want to go through on this, right? Not just Hong Kong Hang Seng Index. If you look at FXI, which is the China large cap, right? This is also right the second time it is piercing against the 200 moving average heading upwards. So I think right now it's worth a look, and we are seeing that the net position readiness is reducing quite a lot already. Okay, right? If I go back here, you can see that it's reducing quite a lot, and hopefully this time around above 200 moving average, it will be better than what we saw previously back in 2003, right? Where there was a drop in selling activities and there was a very healthy TA trend, but the 200 moving average just proved too tough blockage, right, for the share price to go up. Okay, so how do we invest in this? How do I personally invest in it? Okay, so once again, guys, as you're watching all this, right, I just want to say none of what I say here is investment advice. Do your own due diligence. Okay, what I want to do here is to share with you my thinking, how I look at investing, and hopefully that helps you to make a better decision on your own. Okay, now the first one is I'll look at some of the companies that I find traditionally quite healthy. For example, Trip.com. Okay, so Trip.com is like my Booking.com but in China. Okay, they are very, very strong. If you just want to have a look, right, you can just go to Trip.com. Okay, the ticker symbol is TCOM, and you can look at the financials. Right, you can look at the revenue. Right, it's very, very healthy. Right, you look at the income. Right, it's also increasing and it's rapidly increasing over the last 2 years. Okay, why? Because the China travel starts to open up very, very rapidly. And you can see actually it's very inexpensive. PE ratio 20, price to PE, right? Price to book is 2, slightly higher than the past, but nothing to be shocked of, right? EV/EB is also 20. So fairly cheap and very low debt business, only 33% debt, right? So overall, very, very healthy efficiency as well. Okay. So Trip.com, very nice. I like the fact that it's at the 50 moving average here. So definitely want to wait a bit more because traditionally I want to see a bit of the pinkiness, right? Right. I want to see the pink, right? The pink in the gills, the fish gills, right? Okay. Or the RSI I want it to be a bit higher. And right now the net position is a bit dropping. So I don't really like this. I want it to be like, on this little puff over here. Okay. But otherwise, this is a good business, T.com. Okay. So over here, when I talk about China, I won't be talking about specific trades. I will just assume that if I'm investing, I'll just buy shares. So there will not be any options trade yet. Okay, on China. Once I get more clarity, more confidence, then I'll share with you all in subsequent videos. Okay, right. Another one is actually PDD. Okay, so Pinduoduo has been doing very well over the last few months. Okay, you can see over here there was a very, very quick jump and finally peep against the 200 moving average again, finally above, right? This business has also been very healthy if you look at the over here. Okay, so if you look at cash flow, right, it's a very cash flow healthy business. Crazy, the cash flow growth has been growing at a high double digits, no, since 2022. Okay, and PDD also owns another company called Timu. I don't know whether you heard of it before. It is very big in the US, right, where you can buy a lot of discounted stuff shipped to you directly from China, right? It's kind of like fighting against Alibaba as well. Okay, so PDD, I like it a lot. The next one is actually none other than BYD. Okay, so BYD right now is really all over the world. In fact, I would say BYD car sales is one of the highest. Right now, they are over here. You can see they sold over 4.25 million of vehicles. In fact, they outsell EV, okay, outsell Tesla in China as well. Okay, and for those of you in Singapore, you can read all the news. Basically, it topped the 2024 new car sales. Right, it even beat the traditional uh ICE company, right? The internal combustion engine businesses. Okay, so that's how strong the business is right now. Okay, this is not loading. I won't hold you guys back. Okay, I'll just come to here again. Okay, recently had a very big jump. Now we saw a little pullback. I would say this is not the best time to enter. Everything looks very, very overbought. I would want to enter when it's somewhere around here. All right, this type. Okay, so definitely waiting for it to come back down, maybe to the 50 or to the 100. Okay, but this is definitely one healthy, good company that I want to look at investing myself. Okay, yeah. So you can see over here, top 2024 car sales in Singapore, right? First time for a Chinese company. So you can see over here in Singapore, it beats Toyota, BMW, everything else. In fact, global car sales ranking, okay, right? Global ranking, you can see over here. Yeah, right. It is right now the third best selling auto brands in the world. You can see over here, right? The top is of course still Toyota, right? Follow. Okay, let me just zoom in a bit more. Right, Toyota followed by Volkswagen and BYD. Wow, not too bad, right? It is actually the only EV right in the top 10. Think about it. Interesting. You look at market share is the only one that has increased its market share. Yeah, by a whopping 41%. That's crazy. Okay, so I love this. Now, next one is of course JD. JD is for those of you who don't know, JD is kind of like Alibaba but premium Alibaba in China, right? They sell premium products, and you can see over the last 5 years, sorry, this is the last 1 year if I'm not mistaken. Yeah, this is the last 1 year. It has done very well. It went up by 76% already. Wow. Okay, so I like this uptrend. Finally, forming a very nice top against the 200. I like the fact that it bounced off the 200. This is something that we don't see, we don't see, like for example in PDD, right, or in Trip.com, only in BYD and also in JD they bounce off the 200 again. To me, that is very important because from a TA angle, right, that just tells you very, very strong support levels. Okay, support levels is crucial because it tells you that right now the big guys, the big boys are coming in to buy right at this level. Okay. The next one is Meituan. Meituan is a kind of like a semi super app in China, right? I don't know how to explain to you, but I think you need to go there and experience it yourself. For example, you all know WeChat, right? Meituan is kind of like the food delivery, the shopping, the booking travels, all this, right? But I would say the largest is still food delivery for Meituan, right? And right now, once again, I love the 200-day bounce over here. Okay, giving me a bit of confidence here. And the financials, I think Meituan, okay, let me just double check. Meituan, can this one see Meituan? Yeah. Okay, right. So you can see Meituan financials also rapidly improving over the last 2 years. Okay, so really China is coming back quite nicely from the COVID down. Okay, right. And next one is of course Xiaomi. Xiaomi is something that is really interesting. Unlike all the other companies, right? Over the last 1 year, you can see that Xiaomi share price has not behave like a Chinese stock at all, right? In fact, if anything, it looks more like a US stock. It's parabolic rise. Of course, right now it's a bit too high, but once again, very, very strong business. If you just look at uh, over here, okay, so these are all listed in Hong Kong, by the way, right? So can't really do options, probably just shares, right? You can see the net income, for example, right? The net income is steadily increasing over here, okay, right? It was up, then during COVID, then after COVID, it came down, right? This was basically the Xi Jinping punishing them, if you remember, during 2022. Okay. And right now, if we look at ratios, actually it's very, very affordable. right? Price to operating cash flow 21, EV/EBIT is a bit high at 46, but otherwise, this is a great business. Cash flow, let's look at cash flow very quickly, right? It's starting to increase after 2022. So right now, you can see that China is kind of like waking up from its very, very long sleep of the whole last three years, I would say. Okay, right. So I like Xiaomi as well. Of course, nothing is complete about talking about China without talking about Alibaba. Okay, so Alibaba is definitely something that everyone can consider. It is the most straight up related play towards China. Basically, when you're buying Alibaba, you're just kind of like buying index, right? So in a way, if you want to buy Alibaba, actually, I would suggest why not you look at the index as well. It might be a more diversified play, but in a way safer because you don't have the single risk on Alibaba. Okay, now what are the ETF that you can look at? Okay, so I'm going to show you a few ETFs here based on its setup, right? Number one is if you just want the China tech companies, the China internet companies, then KWEB will be the go-to, right? So this is all your tech businesses that's within the China slash Hong Kong ecosystem. Okay. Overall, you can see very healthy, very nice bounce. The whole industry has managed to survive the 200 moving average. Okay. Now, if you don't want it to be too tech focused, you say, hey, I want to focus on just the major large cap company, not just tech, right? Okay. Then you can look at FXI. Okay. FXI includes your China, Hong Kong, all your large cap shares coming together. This one did about 51% over the last 1 year. That is very, very, very good. All right. Now, if you are feeling a bit like crazy, you want to say, hey, how about I go some leverage on ETF? Can I do that? Of course, one thing about ETF is that if you want, you can already do options, right? So there's one form of leverage. Otherwise, actually, there are leverage ETF. For example, YIN, right? YINN, right? So this is the 3x, three times bullish ETF. You can see over the last 1 year, it did 123%. Okay, so if you look at, for example, FXI, it did 51%. You would expect that yin to do 150%, right? But it didn't. It only did 123%. Why? Because this ETF is a leverage ETF using Chinese futures. So there is a decay factor that is in play, right? So generally, I would say for leverage ETF like yin, is that when the prices go up, you can see that it just jump, right? But when it comes down, it also jumps down, right? It also jumps off the cliff. So this is usually very volatile. It's only suitable for those of you who want to get exposure and you don't mind the volatility. Okay, so I just want to share with you different types of ETF. Over here, these are a quick summary of the various stocks that we mentioned and the different ETF, right? So this is the broad-based China, I would say broad-based China. This is the tech in China, right? And this is the 3x China. So it depends on what you want, right? Different type of exposure. Or if not, if you just like to buy individual companies, then these are my top few that you can potentially look at. And I haven't decided what kind of strategy for options, but most of them, for example, I just tell you which one is in China, right? So for example, Xiaomi is in Hong Kong listed, Meituan is Hong Kong listed, BYD is Shanghai or Shenzhen listed, right? So these three you can't redo options, only Baba, JD, PDD, and Trip. Then you can do options on. Okay? All right, with that, let me go into the last segment, which is talking about the recent trade that got people a bit confused. Okay, I actually don't know why it's a confusion. Okay, but basically this is Palantir, right? Now, what happened was that we did a Palantir trade, a sell call trade in 4th February, and we collected $7 for a 80 sell call. Okay. So what we did was we bought shares, and on top of buying shares, right, I also did some covered calls on some of them. Okay. So what does this mean? Maybe I clarify so that next time when I say it, it's a bit clearer to all of you. I tell you the exact number I buy, okay? Right. So I bought 1,000 shares, okay, right? And out of 1,000 shares, I did 7 sell call. Okay. That means 700 shares is going to be caught away should the share price go above 80. And I still have 300 shares that are open up. That means I can still gain the upside. Right. So this is why I say large portfolio guys, you always have an advantage. You can spread out your play over here. Okay. So I basically put in 80K to play with this, and I wanted to see, hey, what's the profit level can we achieve? Okay. So you can see over here, I mentioned to you guys that I sold away the 300 shares, okay, to gain some profit here. And I also mentioned that I think the rest caught away with the call options, right? So over here, I don't really suggest people, you close your sell call and then you let the share run. Although subsequently, Palantir share price did increase, but that is hindsight talking. Okay, that is just hindsight talking. So if you say that, hey P, you know what, I close my buy, I sell call, then the share price go, I close everything, then the share price go out, never make money. Guys, you are complaining because now you know the outcome. Okay. But before that, if you didn't know the outcome, ask yourself what would be the logical thing to do. If you watch my video on 7th February, or sorry, 3rd February, again, I mentioned that this was meant to be a short-term trade. So what a short-term trade means is that when you got the profit that you have aimed for, the best thing to do is not to be greedy, not to FOMO and run. Okay, right? And that's what I did, right? So I sold away the 300 shares and the rest of 700 shares. I say, let it just get called away by the call options. Okay, now this is where it gets confusing for some of you. Okay. So one of you mentioned this. He said, Pete, can you clarify on the profits that was mentioned on the 4th February video? Okay, so he said, in the video, you won't roll the call, you just let it call away, which is correct. Okay. Then on 7th February, you mentioned your call was plus 9%, right? Either you roll the call to a much higher strike price or you didn't sell the call before earnings. Else, please guide the community how to plus 9% when your 4th February video was to sell a few dollars above the share buy price. Okay, so guys, when you read this, right, instinctively, I want you to think about do you remember where the 9% come from? I give you 2 seconds to think about it. Where did the 9% come from? One, two. Okay, if you forgot, let's just go back here, right? Where was the 9%? The 9% is actually here. Okay, the 9% is from the sell call. So guys, remember this. When your shares are caught away at $80, by the way, we bought it at 78 something, okay? When your shares get caught away at $80, right? Do you lose the premium? No, the premium is still yours. So you are still up 9%. Get it? Right? So long you don't close the sell call, you will get this full $7 premium in your pocket. That's how it works. Okay. And in fact, of course, is it just $7? No, because when we bought at 78, right? Because remember the share price was I don't have share price here, but back then when we did the share price, it was 78. Okay. So you make another $2. So it's actually 7 plus 2. Okay. I didn't even mention the $2. Okay. Right. Because I feel that the $7 is good enough. If I mention the $7, then you take 7 plus 2 is what? Is 9, right? So what is 9 divided by 80? Okay, let's just calculate. My math also not very good. 9 divided by 80 is 11%, ladies and gentlemen. Okay. So I indeed reported wrongly that I should have been 11%. Okay. Right. Should be a bit higher. Okay. But then I say, hey, the shares make 22%. Now, where does this 22% come from? Of course, it's from the 300 shares that I didn't sell call on. Okay. So I hope this is clearer to all of you because over here, one of you say, oh, a little bit upset because the Telegram marketed profit that is grossly larger than what we are taught, blah, 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 blah. Okay. Right. The profits is limited to the buy call, rolling, okay. Which is, I understand, okay? I totally understand because sometimes when you sell call, right, when your shares get called away, you totally forgot that you collected the $9 premium, Oh, sorry, the 9% premium, right? You totally forgot it for a moment. So over here, I explain it very clearly, okay? Please go and read the thing. But one thing is that actually, I did not fully show people my profit, right? Because over here, the subscribers say, Wong said, all right, please don't lose values and ethics over a marketing message. Because you have been providing great value so far. Yes, I want to continue to provide value. But guys, I did not lose value and ethics. If anything, I lose value, right? Is I lose on honesty. I lose on my honesty. You know why? Because I was dishonest about my profit. Okay. You know what I dishonest about? Because the real thing is this. I didn't even mention, if you read here, that my actual profit was actually even higher. Why? Because those of you who remember earlier on, we actually did a synthetic on Palantir sometime back. Okay? And I did not show it because I wrote here, I play it down not to make people FOMO. Exactly. Okay? So guys, over here, the important thing is this. No worry, values and ethics is always at the heart of what I do. Okay. But guys, especially to Wong, you made money overall, right? You made money. If you sold call at 84, you buy the shares 80, you made $4 plus the premium. I don't know how much the premium you make, but maybe $7 as well. You made $11 over your 80. How many percent is that? How many percent is that? Okay, it is 13% in 1 week. Right? So guys, you shouldn't be upset. So why is Wong upset in this case? Because he's upset that subsequently the share price shot up even higher. But once again, what is this that I told you earlier on? Is hindsight talking, right? Because if the share price dropped you would not have talked about it at all, right? So guys, don't be FOMO when you're trading. When you're trading, if you got a profit, take and run, right? Even if the trade later on supposedly make more profit, right? It is not part of your plan. That means you actually didn't miss the profit because you never planned for it to happen. Think about it, guys. Before you watch my video on Palantir, were you even thinking about investing in Palantir? Maybe yes, maybe not. I don't know. But if your answer is, hey, I wasn't thinking about it, then guess what? You would have never bought Palantir in the first place. So even if Palantir shot up to $200, you would not have participated in it. And right now, once you have participated in it, you make 13%. Isn't that a great deal? Okay. So guys, don't FOMO, right? For those of you who've been following us very closely, yes, we still have the Palantir synthetic since January, and I didn't close it, right? So another lesson here is that when you have a bigger portfolio, you can do something very magical, right? You can sell call on some, you can keep some shares, and you can even do some synthetic as well. All right. So I want to use this opportunity to share with you guys how to view trading and how to train your mindset so that you don't FOMO, right? You don't think about, wow, I miss out all this profit, but actually originally, right, were you even thinking about it? Probably not. Okay? All right. So I hope this one clarifies to all of you, especially to Wong, right? I apologize if it was a bit unclear, but I hope that now you go back and look at it, you realize that you make 13%. Okay, which is a very good deal after all. All right. Okay, so that's all I have for this session. I will research more on China. Once I got more clarity, then I'll share with you all in greater details as well. Okay, if not, that's all I have, and I'll see you all in the next one. Bye bye.